Hello students, so welcome to your first class of your CA final paper 7 for all the students appearing for May 20 and November 20 attempt. Students, as I told you earlier in the introductory class, that this regular batch we will have it for approximately 65 sessions, 3 hours each. Students, this particular course is majorly designed for the new course students, but at the same time, those who have opted for the old course, definitely this batch is also for them. The only difference between the new and the old course is that the old course will have to study 3 topics lesser as compared to the new course. Again I repeat, 3 topics lesser as compared to the new course. These 3 topics, which would be exclusively be applicable for the new course, I will be doing it towards the end, so that old course students will not be referring to those lectures. So I will guide them towards which are the lectures towards the end which will not be taken by the old course students. So those lectures will not be taken by the old course. Students, this would be most comprehensive coverage of your paper 7 direct tax law. In the 65 sessions, students, we will cover up each and every aspect of your syllabus. I will assume that your IPCC knowledge of your income tax law is 0. There is a reason why I am making this assumption, because your IPCC has got 50 marks income tax and 50 marks service tax, VAT or GST, whatever you have referred in your IPCC. And we all know across India, students take the easy route in their IPCC. They focus more on service tax, VAT or GST and very less on income tax. 2 reasons. Number 1, the syllables of service tax and VAT is very less as compared to the syllables of income tax in IPCC, and secondly they are very easy also. So therefore, doing service tax, VAT very exhaustively and skipping key topics of income tax, still students have managed to pass their IPCC exam with flying colors. 60 marks, 50 plus marks is what these students have scored, isn't it? But all this gets backfired in final CA, because in final CA the income tax knowledge goes at the advanced level. So therefore students, I will make an assumption that your IPCC knowledge is 0. So that is the reason why first class or the first 2 class, I will say, before I touch the topic, you will get a bird's eye view of the income tax law, also the very basic how to approach a taxation law. So basic approach will be supplemented with a bird's eye view of the income tax law, and then thereafter we will start with the topics of your CA final. This is how we are going to start with this particular session. Now students, the key requirement from all of you, what is expected from all of you, you are supposed to carry 1 notebook, 2 or 3 different color pen and 1 highlighter. Why is it so? Because students, the syllabus of the CA final is vast. Direct tax law, the syllabus is a bit vast, and the time which you will have presently would be very less. So I want all of you to revise your direct tax law from the keywords which I will be highlighting upon in all the lectures in respect of the provisions that we discuss in those lectures. So your revision would be based on the keywords which are there in that particular section. Students, one thing which you will keep in mind, you are not supposed to reproduce the income tax provision as it is. You are not supposed to do any by hearting of the provision. So there is no requirement that you are supposed to word by word, you are supposed to reproduce the same provision in your answers. No such requirement is there. You can write it in your own words. But each sections or many sections consist of some very key words which cannot be substituted with any other word. And if you substitute those with any other words, then in that particular case, students, it will be diluting your entire understanding of the subject. At the same point of time, students, see the materials which I have provided to all of you, 5 booklets which would be provided to all the students. This material would be very comprehensive, covering each and every aspect of the provision. Not only that, it will also cover the practical problems which are associated with that particular provisions. In fact, students, the practical problem that you will find in the booklet would be majorly the new questions which I have drafted considering the latest amendment, considering the contemporary areas which is happening in the industries. This is majorly very important, students, when it comes to your international taxation and transfer pricing part of the syllabus. If you see the kind of the questions that the ICI is asking in the examination, in fact, every attempt they have asked new questions. And what are those new questions? These new questions are nothing but what is generally happening presently in the industry. That kind of an approach the ICI has adopted in the examination. So it requires not only a thorough understanding of the provision, that is one, plus also how do you apply these provision in the current scenario of the industry, current scenario. So apart from your modules, which 5 modules, the colorful booklet which will be given to all of you, apart from the 5 modules, apart from the old question which was already asked by the ICI in the exam, we have covered those as well. Plus, we have also introduced new set of questions in your modules, which are, as I told you, essentially based on the new amendments, the new issues, areas which are happening in the industry, new case laws, so on and so forth. So that is how your entire course material and the lecture would be designed so as to give you a firm grip of the contemporary income tax law. When I say contemporary income tax law, what does it mean? It means the latest income tax law. So you have to surrender completely to me, do whatever I tell you to do, revise as I told you on the basis of the key points which you have highlighted in each of the lecture, and believe me, you will score distinction marks as far as the paper is concerned. So students, with this approach, with this particular spirit, and by taking Lord Mahadev, Lord Shiva's name, let's begin with our first class. So students, the basic introduction. I'll just, in fact, in my introductory class, which was there for 10-15 minutes, which I actually gave an introduction of the batch. I've shown the materials also primarily. So primary students, you will have like these colorful materials. Why colorful, you'll ask? Colorful, students, for the reason being, this will help us to highlight the amendments part very clearly and distinctive. You can see herein the green shades which are being put forth in this regard. So all these green shade helps to identify which are the areas where the amendments has been made. So that actually will help you also to be focused on those particular areas in the limited time that you all have for your revision purpose. So students, all of you will take your notebook now, and let's begin with this. So herein, students, the income tax law, Now, Students, any taxation law that you refer, tell me one thing, which is the first section that you are going to look upon? Which is that section that you will look upon when you are reading any taxation law, whether it is a direct tax or indirect tax? First of all, let me ask you this question. What is the difference between direct and indirect tax law? Income tax, we all know it is a part of the direct tax law, isn't it? That we all know, it's nothing but a part of your direct tax law. My question to all of you is, what is the difference between the two? Speak out. I can listen to all of you. You will say, how do you listen? There is a connect. Our soul connects to each other between a student and the teacher. So a teacher knows what is that thing which is going in the mind of their students. I can easily know what is the answer that you are giving it right now, but I want all of you to express very clearly. So what is that particular thing? Now students will say, sir, how do we that? We will be in touch with you, isn't it? Sometimes we may have our queries and all. Yes, you may have your queries. Primarily, what we will do for each particular batch, we will have our WhatsApp group. So WhatsApp group would be created for that particular batch, for that particular branch, or whatever it be. We will create a WhatsApp group. So technically, you have to give your name and number. So that we create a WhatsApp group amongst our students. So this is the number which I am writing it. Do ensure, and I will also give you my own number as well, which I should also be in that part of the group. It's not that I'm eliminated and everyone else is in the group. That should not happen. So two numbers which I have given, 97794 30034, and another number 9867180004, 18004. So in this we will have our WhatsApp group primarily, and in that particular group you will be asking your queries, which I'm going to address the solutions. Students, at the same time, while we read some very important section, I will also give you the link of the BEAR Act. Not all the sections has to be referred from the BEAR Act, but yes, some provisions has to be referred from the BEAR Act. Why is it so? Because some provisions are very critical in nature. It is always helpful that the BEAR Act is there in front of us. This will help us to get the grip of what the law exactly says, and that is how it will help us to really get a complete hold of some very important provision of the income tax law. So some provisions, important provisions, students, we will also address it from the BEAR Act. Provisions would also be there in your booklet, but I want you to get habituated by how to read the BEAR Act as well. So that will also help you to stand on your own. In your own feet, you will be in a position to stand, because as a teacher, it's my responsibility as well to make you learn and understand the income tax law, so that tomorrow whenever you have to refer the act as a professional, you should be in a position to be at ease and read those particular language of laws. So students, this 2 number primarily you will take a note of it. If you are in the center, you will make the group in the center. For those who are in the pen drive mode, or for those who have taken the video lectures at your home, those students, you will just put this, give this WhatsApp message to this numbers, not to me, to the first number, and tell him to add you in the group. So therefore, for the video sessions, for the pen drive students, G drive students, there is a separate group that is being made. So those students will get addressed in that series. Now students, as I told you, income tax law, the first section that you have to refer, which is that first section? Many would have said definition. Yes, definition has to be referred. But students, when you refer definition, initially when you read a definition in any taxation law, you should not read a definition initially. You should refer definition when you arrive at that particular situation. So unless and until you arrive at that particular situation, I will suggest that you should not refer the definition. Definition should be referred whenever the section is in front of you, you have came across with that particular term, and that term would then be referred through the definition. Also in the definition, which definition should be remembered? So you will have a huge list of definition, not that all the definition has to be remembered, but few of the definitions you should know always. Which are those definitions? You will learn as we proceed further. So apart from the definition, the first section in a taxation law that all of you are going to refer is the charging section. So the first section that all of you are going to refer in the taxation law is what? Is the charging section. And can you tell me which is section number? Under the income tax law, it is section number 4. Charging section number 4. And what it says? It says that, so what is the charging section says? The chargeability under the income tax law is on what? The chargeability under the income tax law is on what? It is on not on income, but it is on the total income. Many of you have said income. No, it is not on income, it is on the total income. So what it says, keep writing now students. Charging section, section number 4. Now all of you will take a note of it. The total income of a person for a previous year is charged to tax in the next following assessment year. The total income of a person for a previous year is charged to tax in the next following assessment year. This is what is the language of the law. So section 4, the charge, as again I am repeating, the charge is on what? It is on the total income. Total income of a person for a previous year. Now students, be careful. I hope that all of you have taken a note of it. The total income of a person for a previous year is charged to tax in the next following AY. Now, as I was telling you that it is not on income, it is on the total income. The charge is on what? Is on the total income. And that is the reason why it implies that you need to do a totaling of your income. What is required then? What is required? You need to do the aggregation. Total means what? Aggregate. So you need to aggregate your income, and whenever you have to do the totaling or whenever you have to do the aggregation, that totaling or the aggregation is for a particular period. That totaling or the aggregation is for a particular period, and that period can be a month or a quarter or a 6 months or a year or etc., depending upon what the law has to say. So in the income tax law, the totaling has to be done for a financial year, and that is what is known as the previous year. So we do the totaling of all the income for a particular financial year, which is known as what? A previous year. So when if the chargeability, as you told me, if the chargeability would have been on the income, then the totaling would not have been done. Then the income, meaning thereby I am earning the income every day. So every day when I am earning the income, then I would be liable to pay the tax. But am I supposed to pay the tax every day? Am I supposed to pay income tax every day? And the answer is no. Why is it so? Because the law does not require me to pay the tax on the income, but it requires me to pay the tax on the total income. And that is the reason why the totaling of the income becomes mandatory. becomes mandatory, students. And this is precisely how it has to be considered. If you just, I will give you one last example. In the service tax law or GST, which many of you would be aware of it, in the service tax law or in the GST, which many of you would be aware of it, if you know that in that particular act or in that particular law, service tax or GST, there was no concept of previous year assessment year. Neither it is there in GST nor it is there in the service tax. And that is the reason why for every transaction you know that GST or service tax is charged. In the bill that you get, GST and service tax is charged, it is being collected and then thereafter it is paid. So therefore, in this regard, primarily the GST and the service tax is a transaction based tax. Why it is a transaction based tax? Because unlike in the case of income tax, wherein the chargeability is on the totality of the income, such chargeability does not exist in the case of GST or service tax. So there we don't have something like the total services provided or the total supply. We don't have that. We only have the supply of goods and services. That only attracts the charge of GST, the supply of goods and services. So if there is a total, there has to be a period, isn't it? And the period in the context of income tax law, it is the previous year. Now my question to all of you is, tell me when you will be capable, mark my question carefully, when will you be capable to do the totaling of the income? What would be the early point of time when you would be capable of doing the totaling of the income? When you will be capable of doing the totaling of the income? The earliest point of time when you all be capable of doing the totaling will be which date? Which date? Which date you will be in the position to do the totaling of your income? Of the income for the financial year. Many students say 31st March. No, 31st March you may be earning the income even on that particular date. At 8 p.m., 9 p.m. at night also I may be earning the income. So the earliest date when I will be capable of doing the totaling of the income will be the first day of the assessment year. That is the 1st April of the next financial year, or I can say the first day of the assessment year. So the first day of the assessment year, student, under the income tax law will be referred as what? The relevant date. The relevant date when I am capable of doing the totaling of my income which I have earned during the previous year. The first day of the assessment year. And students, this, as I told you, is the relevant date, or I can say in different word, is also the point of taxation, or I can say also what? The point of taxation. In fact, many students know in service tax law there is a concept of relevant date or point of taxation. In GST also we have this concept of the time of supply, isn't it? There is a concept of time of supply. So the time is nothing but the date, the relevant date, when the value and the rate will be determined. Similarly, under the income tax law, the relevant date is the first day of the assessment year. So students, it is so important that the first day of the AY, so as is charged to tax in the next falling AY. So I will say the relevant date or the point of taxation in the income tax law is the first day of the of what? I will write like this. First day of the relevant assessment year. So first day of the relevant assessment year. So this is the relevant date that I have. This is the relevant date that I have. 1st April of the relevant AY. Now, what is that I am going to do in this date? I have to calculate the tax, this relevant date, whether it is even service tax law, even GST, the time of supply, the date of supply, that date is important for what? For determining the GST amount. And the GST amount is function of two factors. Which are those two factors? If you want to calculate your GST, which is the two factors on which the GST will be calculated? One is the value and another is the rate. So what you need to know on that relevant date? What you need to know on that relevant date? The things that needs to be known on the relevant date are two. One is the value, another is the rate. These two aspects needs to be known on the relevant date so as to freeze the tax amount. Similarly, the first day of our AY is the relevant date on which whatever is the law which is applicable, whatever is the law which is applicable, on the basis of that law, we will determine our income tax liability. So, all of you will repeat. The first day of the relevant AY, the first day of the relevant AY, which is our relevant date, whatever is the law in force as on that date, as on which date? As on 1st April of the relevant AY. On the basis of that law, we will determine our income tax liability for that AY. Income tax liability for that AY. Now, to calculate the income tax liability of that AY, we require two things. Which are those two things? For income tax, what is that two things? Definitely one has to be the rate of tax, and secondly is what? Is the total income. Don't say value. Value is for GST. So GST you require value and the rate on the basis of which you will calculate your GST amount. This value and the rate has to be determined as on which date? As on which date? The date is the time of supply. Similarly, here the relevant date happens to be 1st April of the relevant AY. As on this date, whatever is the law which is applicable, on that basis we shall determine the two things, and the two things are the rate and the total income. So here in students, first of all put an asterisk. I'll give you that notes, whatever I have explained you, I'll give you a brief note. So herein what is required is the rate of tax, and this rate of tax would be applied on what? This rate of tax will be applied on the total income. This rate of tax will be applied on the total income. Fine, students. Now first we will try to freeze the rate of tax. First, now different color pen, students. Now if you have got a different color pen, you can use that, or let us do it later on this note. I'll give you a bit later. So first, rate of tax. Let's focus on the rate of tax. All of you will copy down this quickly. So students, the rate of tax, I'll ask you one question. What is the source from where you get the rate of tax? What is that source from where you get the rate of tax? From where you get the rate of tax? In income tax law, from where you get the rate of tax? So many students have said that the rate of tax we get it from the Finance Act. Very good. Indeed, we get from the Finance Act. Can you tell me, by the way, which Finance Act is applicable for May 20, November 20? By the way, which AY you belongs to for your examination? Which is that AY, assessment year, for your attempt? Assessment year is 2021. So AY 2021, which is the AY for all of you. So for AY 2021, which Finance Act you are going to refer? The Finance Act which has happened. That is your Finance Act 2019. In fact, students, this was the budget year. The 2019 was a budget year, and in the budget year always there are two budgets which is presented. One by the outgoing government and another by the incoming government. Actually, the outgoing government and the incoming government in this case was the same, but I will tell you one important point. The outgoing government prepares the revenue budget and the incoming government prepares the expenditure budget. So that is the fundamental difference. Nevertheless, so two budgets are being prepared. So the Finance Act 2019 is what would be referred to determine what? The rate of tax. So rate of tax, students, herein the two source from where we shall get the rate of tax will be herein the Finance Act. The Finance Act is what we get it. By the way, before I go to Finance Act, I think in IPCC at least you will know for individual there was a slab rate, something like that, isn't it? For in the final C also you will find the same thing itself. Slab rates are there for the individual. For partnership firm there was a flat rate 30%. For a domestic company also there was a particular flat rate, isn't it? So these rates are there primarily. But I'll ask you one question. What was the tax rate for a long-term capital gain? Normal long-term capital gains. What is the tax rate? 20%. See, some students have said. Okay. My next question is, what is the tax rate for your lottery winnings? Winnings from lottery, crossword puzzles, 30%. Very good. Can you tell me which is a section in which this 20% and 30% was provided? Which section in which this 20% and 30% was provided? Can you tell me the section number? So for long-term capital gains, the section number was, which was the section number? It was section 112. Very good. Some students, see, they have studied IPCC a bit in depth. So they are aware of 112. Similarly, lottery winnings. What was the section number? 115 double B. Yes. So these are the couple of section. Now, this 112 and 115 double B was in which act? Finance Act. Was it in the Finance Act? These two sections. Did you read the Finance Act 112 of the Finance Act? No, it was in the income tax law itself. It was in the income tax law itself that there was some few section with a special rate of tax. Few sections with a special rate of tax. Now I'll ask you one more question, students. Whether a company earns a long-term capital gains or an individual earns a long-term capital gains, will the long-term capital gain tax rate be the same or not? Whether a company which earns the long-term capital gains or an individual which earns the long-term capital gains, the question is whether the LTCG rate will it be the same or not, and the answer is yes. Whether a partnership firm earns a lottery winnings or a company earns a lottery winning, or an individual earns a lottery winning, will the tax rate of 30% be applied to all the person? And the answer is yes. What does it imply? It implies that irrespective of the person who earns the special income, irrespective of the person who earns the special income, the rate, the special rate remains the same for all the person. The special rate remains the same for all the person. But when it comes to the Finance Act, then the rate keeps on differing. If we refer for an individual in the Finance Act, we get the slab rate. If you are referring for the company in the Finance Act, the rates are different. So what I am trying to draw a conclusion to all of you is this. There is a special tax rate. And this special tax rate is on special income. As I gave you the example herein, in this context, what is the example, students? Example was LTCG, lottery winnings. So these are some of the examples. And what I will write further, irrespective of the person who earns the amount. Irrespective of the person who earns the amount. So whether, as I told you, whether the person is an individual or a company or a partnership firm, doesn't matter. Irrespective of the person who earns the amount, the rate will be applied constantly to all the person. Fine. And the next one, the first one was the special rate of tax. Second is the general tax rate. The general tax rate. The second one I am writing is the general tax rate. So what about the general tax rate? Is on what? Applied on what? On the balance total income, I'll say. On the balance total income. And this we will get rate as per the Finance Act. And which is the Finance Act for all of you? It is 2019. The Finance Act 2019. So this Finance Act is what is applicable to all of you. So general tax rate, students, on the balance total income, rate as per the Finance Act 2019. In the bracket, if you want to write, you can write here. I am just writing here. You can write below that. Changes from person to person. Changes from person to person. So this is how it has to be considered, students. So the general tax rate is on the balance total income. Rate would be as per the Finance Act, which for all of you it is 2019, and it keeps on changing from person to person. In fact, students, if you remember, when you used to calculate your tax liability calculation which you used to make, remember that you used to apply like this, that under section 112 LTCG at 20%, then you used to write the amount, and then balance total income. Remember this calculation, or you have skipped even this also? Remembered or even skipped this one? balance taxable income or total income. So we used to apply on the balance portion, say the slab rate, and then we used to, as per the Finance Act. I'm just writing the abbreviation. I'm just giving you the format in which you used to solve the question. This is how you used to solve it. So it implies that the special will be applied first and the balance, the total income, will come later. So you have to be very clear and please try to visualize, because before we start entering into the practical problem, I'm preparing the groundwork from the first class itself. So these are the groundworks that we are preparing. So please try to not only understand the concept, please visualize that yes, this is how we used to solve the question as well. That first we will apply on the total income that we have computed, we will select the special income, and on that special income we will apply the special rate of tax, and thereafter whatever is the balance total income, on the balance total income we shall apply the rate which is available as per the Finance Act. The rate which is available as per the Finance Act. So this is how, students, we used to do the entire calculation, and that exactly the point. So hope that you have got hold with this particular first proposition. Now students, if you are done with this particular part, we come to the second one. So this is for the rate of tax. The second one is for what? The total income. As I am repeating it again, the law which is on the relevant date. And what is the relevant date for the income tax law? The first day of the relevant assessment year. And what is the first day for all of you? What is the first day? The first day is the 1st of April 2020. Because your assessment year is 2021. So 1st April 2020, whichever is the law which is there for the rate of tax and the total income, that law only will be considered for the purpose of computing the tax liability for the relevant AY. And what is the relevant AY for you? 2021. So this is the relevant AY for all of you, and the law which would be there as on that date only will be considered for the purpose of determining the tax liability. So now students comes the total income. So let me ask you the next question. What is the total income? What is the total income? Please try it out, and when I'm asking the question, students, we are on the virtual mode. I cannot be physically present. But whenever I'm asking the question, your job has to be not that check out any message in the WhatsApp or in the Facebook or Twitter. Please try to answer it. We are connected virtually. Appreciate the medium and be sincere. So you have to see at the end of the day how you build the character. This is one thing you should realize in life. Big lesson I'm giving it to you in the first class. How do one person builds a character? A person builds the character by doing what he should be doing when nobody is watching him. Because it is easy for he or her, for he or she to get carried away with the moment and try to invite distractions. So they may get carried away with that moment and they may invite what? They may invite distractions. But if you want to build your solid character, primarily it is what you should be doing, what you should be doing when nobody is watching. In fact, like I remember when the childs and all, like when the parents was there in the school days, we used to always open our books and all and just put our face covered in our, so that they are watching us and they are watching that okay, we are studying. And the moment they used to go, books were being closed. and used to run away to play cricket. Those were the golden days of everyone's life. But now we all have become adult, and at this, at this point of time, if we continue to do what we were doing in our school days and all, then students, we are just bluffing our own selves. At the end of it, we are cheating to our own selves. So it's that nobody is going to gain it. We are the only one who is going to suffer a massive loss at the end of the day. So character building is the most important aspect. Degree becomes incidental. Chartered accountancy has got no meaning if you don't have that strong character. This process goes hand in hand, and in fact you will earn the CA degree on one day, but the process of building the character is eternal. It happens every day. And therefore, students, these are the moments of your life that you need to capture it and understand that you need to be truthful to yourself. So we are all connected virtually. The medium is known to us. And whenever, therefore, when I'm asking this question, try to also reply. Try to seek the answer, maybe virtually. Try to recap those things. What the best answer that you could give for this question which I'm raising in the class from time to time. This is how, if you do this, students, then I'm telling you, this medium of learning is more powerful than the face-to-face medium of learning. Why it is more powerful? Because in face-to-face medium, at least somebody is watching you, and therefore you are supposed to be alert. But here nobody is watching you, and it is up to you that you have to build that particular strong character, that yes, it's my responsibility to ensure that I need to get this thing done. And if you can do that every lecture, just be truthful for that 3 hours time. Whenever you are viewing those lectures, just be truthful for that. These are the biggest thing of life. As I told you, CA will stop at one point of time, but your ultimate success will depend upon these strong characters, which will blossom throughout till the rest of your life. So students, total income. So when I'm asking this question, what is total income then? What do you mean by total income? So all the students agrees to say that total income means aggregate of all the 5 heads, isn't it? Aggregate of all the 5 heads. Then do the set off. Thereafter there is some chapter 6a deduction that you have to apply, and that will give us the total income, isn't it? So 99% students, they have all said, or they have recollected that total income means this. Yes, I'm not saying that is an incorrect answer, but it is partially correct answer. Partially correct answer. That total income means aggregate of all the 5 heads, and then from that aggregation we are then supposed to give the effect of set off provision, we are then supposed to give the effect of chapter 6a, and thereafter we will get our total income. This answer is partially correct answer. So somebody will ask, then what is the fully correct answer? This is what it is. Now comes the role of the definition. Now comes the role of what? The definition. And the definition, students, that you have to refer for total income is section 2 clause 45, the most important definition. Definition of what? The total income. And this definition starts with the word means. It means. Whenever you read the definition, students, the definition will have something like it includes. I'll expose you in the next 10-15 minutes, you will be exposed to the definition which includes. Then you will say what it means, what is the significance of that definition. That also you learn in the today's class itself. But this definition, it means. So whenever students, any definition which has the word means, it implies that this definition is an exhaustive definition. This definition is what? An exhaustive definition. if the definition is an exhaustive definition, then nothing further can be added or nothing further can be subtracted. Nothing further can be added, nothing further can be subtracted. This becomes the exhaustive definition. And accordingly, students, the definition 2 clause 45, it means what? It means, as section says, income which falls, or I'll just, if you can just allow me, students, I'll write like this, so as to, I'll split this definition, students. The sentence, I'll split it into 3 parts, and the 3 parts are, it means what? It means income. Income which falls, not fails, which falls within the scope of, section 5. And third one, and computed in the manner laid down under the Act. And computed in the manner laid down under the Act. And computed in the manner laid down under the Act. So it means what? It means income, which falls within the scope of section 5. And what is point number 3? And computed in the manner laid down under the Act. So there is only one sentence, but I have split into 3 parts. One sentence split into 3 parts. So therefore, students, here the point which I wanted to raise to all of you is this: income which falls within the scope of section 5 and computed in the manner laid down under the Act. What you answered, that aggregation of 5 heads, thereafter the set off provision, thereafter chapter 6a, what you all have given me the answer was on point number 3. All the computation part, how to compute 5 heads of income, set off provision, give the effect, chapter 6a, you will get your total income. That is the computation. But before that, we need to take into account the first 2 steps. And the 2 steps are, the total income means there has to be an income. That income should also fall within the scope of section 5. Once it falls within the scope of section 5, then we get the qualified income. I will say after point 2, what I get is the qualified income, and it's only of the qualified income that I will do the further computation in the manner laid down under the Act. Only of the qualified income I will do the computation. I will do the computation in the manner which is laid down under the Act. This is what the total income is all about. This is what the total income is all about. So students, in this regard, we will now go, I have given you all the 3 points. So now in your notes, students, below that, herein, first of all, put that asterisk of relevant date. So I'll give you first the note on that relevant date, and then 1, 2 and 3. Please write in this regard. Under the income tax law, the relevant date is 1st April of the relevant AY. The law in force as on this date shall only be applied for the determination of tax liability which is the function of two factors, that is total income and the rate of tax. Copy down this quickly, students. If I ask you what is this income, then what is the thought that comes to your mind? Anything which attracts to your thought when I ask to any person, what do you mean by the term income? And what is that thought that will come to your mind? They will say, sir, rent is an income, dividend, interest, those are the income. Very true. But by saying so, what you are giving me is the element of income or the examples of the income. So what you are in fact giving me as an answer is nothing but the element or the example of the income. But if I ask you the meaning of the income, then what is that meaning of the income? So income, students, is anything, an amount. Income is an amount which is derived from a definite source. So what is income? It is an amount which is derived from a definite source. Definite source. So if the employment is your source, then the salary is the income. If the house property is the source, then rent is the income. If the business is the source, then profit is the income. If the investment is the source, then dividend or interest is the income. And if we all know articleship, if the articleship is the source, then what? Stipend is the income. Very good. At least whatever it is, 1000 rupees, 1500 rupees, whatever you are getting, at least there is one important aspect. Do you know what is the important aspect of your stipend or any example which I have given you just now? The important aspect is that there is a certainty and there is a regularity. Certainty is there and regularity is there. Or to put it in a different way, there is a right to receive the amount. So unless and until that right is established, the amount cannot be considered as an income. And the right is established only if there is a source attached to such amount. And that amount should have accrued to that particular person. Only then we can say that this is the income of that particular person. So students, there has to be what? A definite source. From that definite source, the amount should accrue to that particular person. Then that amount will be considered as the income of that particular person. And accordingly, it will be charged to tax. So in this regard, income is an amount which arises from a definite source and should accrue to the person. Only then it will be referred as the income of the person. So I'll just write and you'll also take a note. Income generally implies as an amount which arises from a definite source, which arises from a definite source. So I'm giving the example that source and amount arising from the source. The source and the amount which arises from the source. The last word is source and the amount which arises from the source. So the source is, say, employment. Here it will be salary. House property. Here it would be the rent. Business. Here it would be the profit. Say investment. Here it would be interest or a dividend. Some of the examples, isn't it? Therefore, there has to be point number A, certainty, and point number B, regularity. To receive such amount. Therefore, there has to be a certainty, and point number B, regularity to receive such amount. Okay. So through with this. Through with the students. Okay. Right, next, further, the said amount should also accrue to the person in order to attract what? So in order to attract the chargeability of the amount. In order to attract the chargeability of the amount. Why it should accrue to the person? Why this statement is important in the given context? Can anyone answer this one? Why I have written this sentence? See, that source feature have been known to us. That source feature is that there has to be a certainty and regularity. That is a feature. But why this sentence which I have just written here, further the said amount should also accrue to the person in order to attract the chargeability? Why this sentence is important? So students, this sentence is important because we all know the charging section. What is the charging section? The total income of a person. Can you see this? This is the reason. Unless and until see, it's a direct tax. It's a personal tax. So the income has to be associated with the person. The income has to be associated with the person. So direct tax being a personal tax, it has to be associated to a person. So therefore that income should accrue to that person, only then the charge will be attracted. Okay. Now students, here lies one of the very important case law for your examination. Now, one of the ways that we deal the case law, I think in the first class many of you are not having a booklet, but the way we discuss the case law is like this. There are two approaches of doing the case law. One approach of doing the case law is do all the case laws towards the end. This approach, I am strictly against this approach, that there is a separate case law lecture wherein the case law is being taught. This approach is the most dangerous approach, and it does not give you the hangover of the entire knowledge of the subject. You should do the case law when that situation has arisen. When you are in the very depth of the provision, that you are doing the provision, at that time itself you should supplement with the relevant case laws. This is how we are going to deal with the case law itself. And therefore, in the very first hour of your session, we are dealing with one of the most important and expected case law in your examination, and that is the judgment of the Supreme Court Now, I'll tell you about one thing about the judgment, students. The name is Henkel, Henkel, SPIC India Limited, Henkel, SPIC India Limited. One thing I'll tell you, there are thousands of the case laws which are there in the subject. Now it is in lakhs. So that many case laws are there. Obviously, that many case laws you are not expected to go through also. What we are going to do or discuss would be all the landmark judgments. Now, that would be discussed in your class. At the end, what you need to remember for your examination, I will filter it to around 60 judgments. That 60 judgments should be remembered by all of you for your attempt. Approximately 60, it can be more or less 2-3 case laws here and there. But that is the kind of the number of case laws that needs to be remembered. One of the case laws is this case law which I am writing for all of you now. Let me first give you the brief facts of the case. What has happened in this case scenario? Students, this company made an IPO offer. So it was an IPO case. So what happens, we all know that when the company goes for an IPO, it receives a share application money, isn't it? So students, all the money, the share application money is received by the company. Now there is a very important SEBI guidelines. I think many of you are aware of it. As per that SEBI guidelines, the application money received by the company should be deposited in a trust account. The application money received by the company should be deposited where? Not in its bank account, but in a trust account till the time the allotment of the share has been made. So till the time the company makes the allotment of the shares, the company has to put up that particular application money in. Where it has to be put up? In that particular share application, in that particular trust account. So the company has put up that money in the trust account, and in that trust account, the money which was there, the interest got accrued. So interest, definitely you have deposited the money in the trust account and the interest amount got accrued. Now one thing which is very important is this. As on 31st of March of that previous year, the company hasn't made any allotment of shares. As on 31st of March of that previous year, the company has not made any allotment of the shares. The question came up was about the treatment of the interest amount. What will be the treatment of the interest amount? Will the interest amount be taxable in the hands of the company as on that year or not? The assessing officer sought to charge the interest in the hands of the company. The company rejected this proposition from the assessing officer, stating that it is not liable for tax. So the issue was whether the company will it be chargeable for this interest which got accrued in that trust account, and the Supreme Court said it no. Why it said it no? What is the reason? The reason it gave was that the company, till the time it makes the allotment of the shares, be careful now, the company till the time it makes the allotment of the share does not have any right, either on the principal portion of the amount or on the interest amount. The company does not have any right to use either the principal portion or the interest portion. Why it does not have any right on the principal portion or the interest portion? It does not have the right for the simple reason, students. Tomorrow, because if there is a oversubscription, if there is an oversubscription of the amount, then what the company has to do? They have to refund the amount. The share application money has to be refunded, and the share application money has to be refunded along with the interest which got accrued. So it is not that the company will refund the principal amount and keep the interest amount with itself. No, it has to then refund the principal along with the interest. So it implies that till the time the allotment of the share is made, the company does not have the right to receive either the principal or the interest amount. And therefore, since there is no right to receive the interest amount, accordingly the interest has not been accrued to the company in that previous year. Which previous year we are talking about it? The previous year in which the company, although has received the share application money in the trust account, but it has not made any allotment of the shares to the shareholders. It has not made any allotment of the shares to the shareholders. So in such cases, the interest was not accrued to the company, and hence it is not chargeable to tax in the hands of the company in that particular previous year. This was a judgment of the Supreme Court. So students, see the judgment. Why therefore now, students, it is important that we learn the case law along with the relevant provision or the discussion, because it will help you to analyze this answers or help you to write the answers in the most precise manner. Because those students who do the case laws towards the end, what happens to them? The head and tail, they only know the name of the case law if they at least remember the name of the case law, and they know only the conclusion. But the main premium that you get, the premium marks that those students will get, is only those students who can write the analysis part of the case law very well. So one who can analyze the case law very well are the only students who are going to get good marks. So that is the reason why, students, I request to all of you that you should always keep in mind one thing, that always primarily do the case laws when you are doing that particular provision or you are having that particular discussion. This is the timing when the case law has to be done. And that's the reason why I've seen my students answer 16 marks, case laws they're being devoted. This was a bit old, I mean 3 attempts back, 2 attempts back, I think 2 attempts, no, 2 attempts back, when 100 marks paper was there. At that time 16 marks was a case law which was being devoted. Now it is for 8 to 10 marks, but earlier it was for 16 marks. Out of 16, our students used to score 14 marks. And I've seen other students also, their name of the case laws are right, their conclusion is also right, but out of 16 these students have scored 4 marks, and they think that their answers are right. No, their answers is not right. ICI is looking for the content, and the content is the analysis, how you have arrived at the yes or no. That is the critical part. So students, this is my request, don't adopt the shortcuts in these cases. It will backfire badly. When you get your results and you see that you don't get marks in the paper, at least some problem has to be in the way you have prepared for that paper. So students, Henkel Speak India Limited, right here briefly the facts. Brief facts, I'll just give you the brief facts here, although the detailed facts will be given to you in your notes, it is already there, but here we will just go with the brief facts. Please write, the company has made an application of the shares. Oh, sorry, the company has received, just write like this. The company has received the share application money which was deposited in the trust account, pending the allotment of the shares. During that previous year, the interest income was accrued. The interest income was accrued in that account, but no allotment of the shares was made by the company. Right here the issue, whether the interest accrued in that account could be taxable in the hands of the company in that previous year. So whether the interest accrued in that account could be taxable in the hands of the company in that previous year. So this is the issue under consideration. And write the answer. So what shall be the answer in this case? So first point, since the company has not made the allotment of the shares in the previous year, comma, it neither has any right to use the principal amount nor it has any right to use the interest accrued on such principal amount. Right, point number 2. If on account of oversubscription if on account of oversubscription, comma, the company has to refund the application amount, then it has to refund the amount along with the interest. It has to refund the amount along with the interest. And the last one, therefore, unless the shares are allotted, comma, the interest could not be said, the interest could not be said to have been accrued to the company, could not be said to have been accrued to the company, and hence it could not be taxed. On such interest in that previous year. It could not be taxed on such interest in that previous year. Fine, students. So this is what the entire situation will be in terms of your answers. So if in the next year, if we say that the allotment has been made, in the next year, if you say that the allotment has been made, then yes, you can say that the interest will be accrued to them. So accordingly, in the next year, when the allotment would be made, then they will have the right to receive the principal as well as the interest amount. So students, this is where the things are. Income means what? There has to be a certainty and regularity. And secondly what? Secondly, the company should, the interest should also accrue to the company. So unless and until the accrual is to the person, the charge will not be attracted, because that is what is the basis of section 4. And this is what the case law of Henkel Spec India Limited was all about. So what is income? What is income? Income is an amount which arises from a definite source, so that there is a certainty and there is a regularity in respect of such amount. Further, such amount should also accrue to the person. Such amount should also accrue to the person. This is what the entire concept of income is all about. Fine, students. So students, this is how it has to be considered, and on that basis now I will say that the concept of income, which is understood generally, is over. Now we will discuss after the break the other part of what is the concept of income. Now this would be a very important part. The second part of what do you mean by the term income, and that part is on the basis of the definition of income. So the next part, students, that we will have would be on the definition of income, which we will do in section 2 clause 24. So one definition we are going to do of income, that will be in our next part. So be careful. Right now we are in the total income side. We are in the total income side, and in the total income there are three things. There has to be an income. That income should fall within the scope of section 5 and should be computed in the manner laid down under the act. This total income, once the total income is determined, on that total income we will apply the rate. That rate would be either the special rate, which will be as per the Income Tax Act, or the general rate of tax, which would be as per the Finance Act. Both the total income as well as the rate of tax, both the total income as well as the rate of tax has to be determined as on the relevant date, and the relevant date happens to be the first day of the relevant AY, which is the date on which the tax liability is freezed. That is, whichever law is in force as on that date would be made applicable for the determination of tax liability, which is nothing but the function of two factors, and those two factors are total income and the second one is the rate of tax. So students, this is what the entire aspect of the gamut of the discussion is all about. Now one thing, students, before you start having your break and all, last point which I'll let you know, very important point. You will find in the every amendment, please notice this, I'm going to make you aware of it. Check out the amendment, all the amendments that we will learn. You will find suddenly the amendment is written with effect from 1st April 2020, like that they have written. First of all, many amendments you will find, not all of them, but many amendments you will find with effect from, they will give the date. Which date? 1st April 2020. Now what is the relevance of that date? They do know they have to make this section or the amendment effective from this date. Which date? 1st April 2020. Because they also know whichever is the law which is effective on that date will be applicable for determination of tax liability for AY. Which AY? 2021. So therefore they write in the amendments effective with effect from 1st April 2020 is what you are going to find in the amendments. And this is the logic, that they give a date and that date is the 1st of April of that AY, because by virtue of which you have made the amendment implementable. You have made the amendment implementable from AY. Which AY? 2021. And that exactly is the point. Did you got this one? So this is your part A now, and the balance time I'll have it in part B of my first class. So therefore you can take a break. So I'm closing this video, and then we will reopen the first 1B part. So 1B you will accordingly will play immediately after you come up from a break, but don't take much of time. Come back and then start playing 1B. And in 1B we'll start with the definition of income under section 2 clause 24. See you then.